Welcome to the Penthouse Pod, a lifestyle show podcast brought to you by Lou Geffen Sotheby's International Realty. I'm Yael Geffen, and today we are talking about buyers who enter the market and might fall into problems when it comes to paying off their bonds. And today in studio with us, we have Nondamiso Kapai, who is part of the ABSA Home Loan team, the managing executive. So lovely to have you. Let's talk about the reality of the situation. South Africans are struggling right now for the most part. Financially, less disposable income, the economy is hit hard, the interest rates have gone up recently, and owning a home at this point in time can be really expensive. When life happens and they're struggling and they can't meet a bond payment, can you share what is the best way to handle this with the bank? It reminds me of, you know, I compare myself to that character of Confessions of a Shopaholic. And when the credit bureau keeps going after her because she owes so much money on her credit cards, she eventually saves his name, or the credit bureau's name, as like, do not answer the phone, Derek Smith. And then she's in this elevator, and then the phone rings, and he happens to be there. And you don't want to be in that position where you're avoiding the bank's calls. You know, how do you have that transparency? If I'm a buyer, if I've bought a home, life has happened, I'm in debt, I can't afford my bond, you know, what do I do?
Yeah, that is so real. It is so real because life does happen. It happens. And I want to go back. In fact, this topic is a topic that we don't often speak about.
No,
right?
we don't.
And I think it's such an important one. So let me just go a bit into detail around the topic. So the bank does not have interest to repossess a property. That's not our interest.
I'm so glad you shed light on that, because I think a lot of consumers don't actually realize that.
It's not in our interest. It's the very last resort after everything else that we would have done as part of that journey. Banks, and I'll speak about us specifically, we do offer various propositions for consumers that are in distress. And there's broadly three categories. The first one is your short-term plan. So let's take an example here. If you find yourself in a very difficult situation, we obviously have to assess, and we look at you individually, and we are able to bring down that monthly repayment down to 25% of that monthly repayment for a short period. That's why it's a short-term plan, max 6 months. That at least gives you the relief to get back onto your feet. So it's as simple as that without talking the technical jargon. That's the first bucket of solutions, short-term plan. The second bucket is your long-term plan. And again, very similar. We look at your own individual circumstance. We look at your account, etc. And here we can do term extensions and help you bring it back in line if we do go over 30 years. But it's also very specific and geared to help you if you find yourself in a situation where you are not able to meet your monthly obligations. The last bucket I call Help You Sell is where the consumer then decides, you know what, I'd love to downscale, I'd love to sell my current property, help me out through your network of agents as a bank, and then I can be back on my feet. Maybe I can get a property that is in line with where I find myself now from a financial perspective, and we're able to do that. We call it the Help You Sell program. But if I double click on that third bucket, within that we do offer discounts. If you find yourself in a shortfall where you sell your property but you're still owing the bank something, we do offer discounts. And those discounts reward those consumers that speak up sooner rather than later.
That is so good to know. I think that when people are in this position, they're probably very emotional and they feel like they've failed. And when people feel like failures, it's very hard to admit or engage and be transparent about it. So what I'm hearing is you saying that the sooner you communicate with the bank, tell them what's happening, tell them the financial situation, the better, the actual better outcome for them.
Yeah, you are so spot on. In fact, I would even go as far as saying, if you think that you might find yourself going through some financial trouble, even though you might not be at that current point in time, phone the bank. Phone the bank sooner rather than later, because then we're able to sit down and give you more options. And when I talk about this help you sell, it's exactly that the sooner you speak up, actually you get more discounts and financial assistance. We actually have a component of that proposition where there is a cash component where you can use some of that money to either cover a shortfall, or you can use it for rent. Maybe you want to rent for the first couple of months. It's there to incentivize speaking up much sooner rather than later, because we understand, we know that when trouble happens, a lot of consumers are feeling, I can't answer the call. Do not answer. And I want to encourage the audience out there, please engage your bank. We're not in a business of repossessing homes. In fact, our purpose in the business is very, very clear. We're here to house the nation and shape the industry in a meaningful way. We understand the South African context.
For us, as real estate professionals, it's a very sad day for us when our clients come to us and lose value on their home, which is an asset and a great asset to have is property, as we know. But if it comes to that point for them and they're looking at selling their home and they've lost a lot of value, it's sad for us too, especially if we help them purchase the home and their dreams weren't realized. So, I think neither of us want that for our clients.
Absolutely, absolutely. I think we joined in our aspiration to make sure that people live in their homes, they enjoy their homes. We're leading them home, right? We're leading them home. There's so much out there today, more than ever before, for consumers.
It's interesting. I did a recent interview, and there are so many ways to get in on this property ladder. And this trend of micro apartments happening now for people that can't afford to have, they're a younger generation and they can't afford to go for a proper apartment. So now it's a micro apartment and it's very funky, and it's in a dense neighborhood, and you can't really swing a cat in the apartment, but there's a gym facility and there's this. And it's so wonderful to watch our clients and your clients, our clients are your clients, we share clients, go on this real estate journey of when they first go from something like a micro apartment, then they get a promotion, and then they go to an apartment, then they want to get married, and then they go to a house, and then they, then they retire, and then they want to downgrade, and it's a journey. It's an absolute journey.
It's an incredible journey, and I love the way you tell the story. I mean, even for ourselves as a bank, we look at it that way, the journey, right? And we often ask ourselves the question, are we showing up enough in that life journey? If we are we giving the relevant products and services? And I'll give an example, because you do get young people that might consider, actually, I'm thinking of investing in property. I might not live in it, just to invest in property. Does the bank consider rental income? Of course we do. Similar to a much more mature investor that has had property and decides to buy into a new development for buy to let, we absolutely think about those elements and how we offer those right propositions to boost your affordability so you can own property. So it's absolutely beautiful.
I'd love to pick your brain a bit. because when I first bought my investment property and I knew it was in a great position, I knew it was in a great neighborhood, like I said, all close to all these areas of interest, close to schools, all of that. I knew I wouldn't have a hard time getting tenants. But one has to consider that the rental income that you're going to get might not cover your bond. And it depends on the market, right? So if the interest rate is low, you're getting more than your bond. If the interest rate goes up, you might not even cover it. And, no one really warns about that sweet spot. And from ABSA's point of view, is there a sweet spot, or is there a kind of formula? It's so varied and variable with the interest rates because they go up and down. But I think it's so important to educate our audience that, just because your bond is X and you're renting it out, it might not cover your whole bond. It might not cover your whole bond. Certainly might not cover your rates and levies, and you can still be holding that amount.
No, absolutely spot on. In fact, I'm thinking about my own journey as well. The rule of thumb for us, we say it would be ideal, and of course anyone would want to make sure that it covers the full bond amount, but there's also other expenses, Yael, that you and I know very well when it comes to owning property, because you've got the levies and everything else around that. I do think, and there's a lot in the market, in the industry. I mean, Yael, some will say maybe up to 1.1% of the value of the property might be a sweet spot. But again, I do think that it does also depend on the type of property and the market for which that property is for, right? And where that property is located, right? There's a lot that you need to layer in. I worry about us keeping it at a formula level, but not actually guiding the audience, because we have to guide the audience that there's a sweet spot, but also consider these other elements.
And I think what people don't consider as well, if they're doing a buy-to-let or investment property, that tenants move out.
Yeah, absolutely.
And you might not get someone that comes in at the exact same time as your tenant moves out. So for a possibility of 3 months, your property could be sitting empty, which means you're paying the bond and you're not getting a rental income. And that's important to also consider.
But that's what I love about this industry. And Yael, I use the service that you also offer, because that's the guidance that you give to the consumer.
Correct.
The vacancy rate, because you have access to that data for this area, so that the consumer is ready should it happen that the property is vacant for a couple of months, because your commitments don't fall away just because a tenant is not in the property, right?
Now let's talk about the opposite. We've spoken about customers that are struggling, that need to approach the banks, that cannot meet their bond payments. But let's reverse it a little. What if you've come into an inheritance, you've won the lotto? God knows how many times I've tried.
Love to win the lotto.
But the reverse happens, and does one try and pay off their bond as quickly as possible? Like, what are the options? Because now it's a different situation.
A lovely question, because it covers quite a number of things. But let's perhaps start with putting more money into your bond. Absolutely. If you have the money and you're able to, and your circumstances allow you to, you can pay much more into your bond. In fact, we do see customers that actually pay more than the monthly repayment for their bond. What that actually does over time, it reduces the interest costs, right? Because your principal debt reduces and the interest on the principal debt also reduces over time. But there's an important point I want to land, and I know there's different names for it in the market. Others call it access bond. We call it a flexi reserve facility.
And is it the same thing?
Yes.
Okay.
Yeah. Flexi reserve, but let me come back to the flexi reserve facility. It allows you can pay more, And if I can simplify it, it's a pocket that remains where you can tap back into the funds that are over and above your monthly commitment. But then there's a special, because as customers, sometimes we don't read our fine print when we take up a bond, right? There's fine print in your mortgage loan agreement. Specifically, from a bank point of view, we have to make sure that when you do decide to withdraw, because we do get customers that put in a lot and want to withdraw all of that out. And what we don't want is a situation where you then end up with the calculations owing more, which is above your monthly repayment. That would be reckless lending, which is why in that mortgage loan agreement, we say the bank can determine the maximum amount that you can withdraw out of that pocket called the Flexi Reserve.
So people don't read that.
They
just
don't read
glance
it.
over that and they think, let me just draw this amount of cash.
I'm going to draw all of it out.
Yes, and then the bank's like, no.
But remember,
that's not what was signed.
Our interest is to make sure that we protect you as the consumer. And that's why that fine print is absolutely important. And yes, you do get consumers that you can withdraw. That's the whole point. You can withdraw, but always remember that the bank will determine the maximum amount that you can withdraw for the Flexi Reserve. But going back to your question, because it covers a myriad of things, then you'll get those customers that say, actually, I'm thinking of expanding my property portfolio.
Yes.
Absolutely.
Better than buying that new car, because that's the worst investment known to man.
It's a special need that we also cater for as a bank, right?
Yes, sorry. I should have considered that. But one can increase their property portfolio. It's a great time. Hey, you know, let's invest more in property. I'm getting a lovely return or lovely yield. Let's add to this.
Exactly. So we as a bank do offer a very specific proposition for customers that find themselves in that scenario. So we say, absolutely, we're happy to help you to expand your property portfolio. But at the same time, we're also here to help boost that affordability. Let's take a scenario. Yael finds a lovely development and says, shucks, I don't have an existing rental agreement that I can give to the bank to show that actually I'm going to get some rental income. We say, don't worry. We've got partners in the industry that help us to get the data that helps us to understand that part of the segment of the market. So we have a product that has what we call future rental income. We're actually able to work out what kind of rental income you're likely to get from that property. And we add it back to your affordability. We add it back because then that allows you to expand suddenly your property portfolio, because you can then get access to buying your next property, and perhaps if you've got even more cash, even the next one, right? And that's why I say this industry is an incredible industry, because the kind of solutions that are out there, it's so much more than when our parents bought property, right? Yeah?
Completely. If I think about it, when our parents bought property, they were in their 20s and they were getting these massive homes. And the industry has completely evolved where it's become so expensive for first-time home buyers that the average age we're seeing is like 37, 38, whereas like at 21 you had a beautiful house. And what we're seeing as well is that people are renting first and waiting to invest, or parents are buying their children properties and then eventually the children will pay them off. Let's talk about this evolving client, this industry. How has the bank evolved with it?
Oh, we always brainstorming different propositions and how to serve those unmet needs of the market. And I want to go back to the average age. I mean, 37, 38.
Yeah.
Because it usually pivots around there. I know at one point we saw average age of 41.
Yes. It's gotten younger, which is exciting.
Which is good.
But it's still not in your 20s.
It's not in your 20s. But that is why, when we sit and look at our different segments, we then delve deeper to understand what are those friction points for the consumer that we are not solving for quite right? And which segments of the market will struggle with certain transaction costs? And hence you'll hear the term where some banks will offer more than 100%. So they're willing to give you more than the amount that you're looking for, because when we look at the average age and we look at the first-time buyer, we then understand, hang on, there are certain segments of the market that just don't have the money. And therefore, we need to cover some of those transaction costs. But we expand even further because we work a lot with attorneys, right? And with that understanding, we're then also able to offer attorney discounts, right? Because it is part of the transactional costs of purchasing a home.
Which I don't think a lot of our audience is aware of.
Absolutely. And those are the things that I think consumers need to not be shy to ask. Ask the questions. I don't have money to cover bond registration costs, or I don't have enough. What does the bank offer? What do banks offer? And that will allow you to delve deeper into the various propositions that are there. Whether you're a first-time buyer or an investor, or you're thinking of downscaling and you have an existing home, there are more solutions today than ever before. There's something so important that often consumers forget, Yael, that the government actually offers a subsidy for first-time buyers. It was previously known as FLISP, in short, which stood for First-Time Linked Individual Subsidy Program. And the fundamental role that that subsidy plays is to enable many more consumers to enter the property market, especially as we talk about first-time buyers. If you think about affordable housing, the segments of the market that often struggle to get into property, so that subsidy is absolutely important. But here's the good news, because as a bank, we consider that as part of the process. We guide you, and we're able to give you what the requirements are, the eligibility requirements. Again, consumers out there can even Google. In fact, it's on our website. We talk about first-time home finance. I think it's an incredible subsidy for consumers. And the fact that as a bank, we play a fundamental role in helping consumers access that subsidy if they do qualify to get access.
That is fantastic. Thank you for sharing that.